Relevant to questions 72 to 76. As company is preparing its financial statements for the year ended 31st December 2017 and has a number of issues to deal with regarding non-current assets. Okay. First, as company has suffered an impairment loss. There is impairment loss of 90,000. Let me change the formatting. Keep it financial and no decimal points. So impairment loss is 90,000 relating to one of its cash generating units. The carrying amounts of the assets in that cash generating unit prior to adjusting for impairment are. So prior to this thing, they had goodwill, they had patent, they had land and buildings, they had plant and machinery, and then they had net current assets. Okay. So the patent is now estimated to have no value. All right, patent has no value. Let me write that also. Patent is zero. Hmm. And goodwill 50, 10, 100, 50. What is that? Goodwill 50. Oh, patent was 10. Now it has zero value. So from 10 to it became zero. Okay. And 50 and this all these numbers are in thousands and in dollars. 50, 10, 150 and then 10. All right. The patent is now valued at zero. All right. During Now, what is the second thing here? During the year, increase the size a little bit. Yeah. In the second, what they're saying during the year to 31st December 17, during the year 2017, this company acquired D for 10 million. Its tangible assets being valued at 7 million. Tangible assets is how much? Tangible assets being valued at 7 million and goodwill on acquisition being 3 million. Okay. Assets with a carrying amount of 2.5 million were subsequently destroyed. Mhm. Assets of 2.5 million destroyed. Okay. Assets of 2.5 million destroyed. As company has carried out an impairment review and has established that the company could be sold for 6 million while its value in use is this thing. So maybe we can say fair value less cost of disposal is how much? 6 million. And then they are saying value in use is. So the higher of these two things we take for recoverable amount, 5.5 million. So higher is 6 million. So we will take this thing fair value less cost of disposal. Okay. For impairment. All right. Third, a freehold property originally costing 100,000. Freehold property costing how much? 100,000 with a 50-year life has accumulated depreciation, and accumulated depreciation is how much? 20,000. Okay. Assets is to be revalued. So after this, how much it is? It is like 80,000, and then they're saying revalued at 130. So there is an increase is this thing. Okay, what is the post impairment carrying amount of plant and machinery? In this question 72, nearest dollar they are asking, not in thousands, not in millions, absolute value they are asking in question number 72 in dollars. So what is the post impairment carrying amount of plant and machinery? So you see there was impairment loss of 90,000. So patent is zero, so that means 10 is allocated here. Okay. Remaining 50 will allocate here. Out of 90,000, 60,000 is allocated here. Here it will be 0. Okay. So 60 is already allocated because 10 they are saying that patent is now 0. That means 10 is allocated here, and then the we allocate the impairment loss to goodwill first. So all the 50 will be this thing. So this will become 0. This will become 0. This will remain at 10. So land and building and plant and machinery, we have 30 left. 60 we have done and 90 was total. So this remaining 30 of impairment will divide by 150. Sum of land and building of 100 and plant and machinery of 50. So divide by 150 multiplied by 100. Okay, so 20 will be allocated here, and same way here we will take this 30 divided by 150 but multiplied by how much? 50, which is this thing. So the remaining 30 will be allocated in this ratio. So land and building will be 80 and this will be 40, and so impairment loss is 90. If you sum this you see 90, so 90k is allocated, and the ask is what is the question that they are asking? 72, what is the post impairment carrying amount of plant and machinery? So plant and machinery is how much? This thing 50, 10 allocated, 40 should be 40. So they are asking in absolute amounts, dollar, and these things are in thousand. So what we should mention here, we should mention it in thousand. So we will not type 40. We will type how much? 40,000. You know, for this we will type 40,000. That will be our answer for question number 72. 72 will be 42,000. Question number 73. The finance. This is 72. The finance director has been asked to report to the board on the reasons for the impairment review on the cash generating unit. Which two of the following would be an internal indicator? Okay. So the indicator of impairment can be external, it can be internal. So if the now let's see all of it. So in the first they are saying that market value of the asset has gone down. Second, adverse changes to the use to which the asset is put. Adverse changes to the use. Then the asset is fully depreciated. hmm, and depreciated, and then the operating performance of the asset has declined. Operating performance declined. Okay, so these are the four this thing. So what should be this internal we need to take? Okay, so market value is not an internal thing. Market value is external. So is they're not asking. Adverse changes to the use is definitely internal. How we use an asset is an internal thing. So this is internal. If it is fully depreciated, this is irrelevant for impairment. Irrelevant. This is not this thing because it is fully depreciated, so it is neither not a matter for impairment. Fully depreciation is different. This thing, it is depreciated, then it has zero value, so nothing impairment as such. Then operating performance means how much it is generating economic benefit that has declined. Operating performance has declined of that assets. It is not dependent upon any external factor. This is also internal. Okay, so the second and the fourth will be the answer. Okay, 74. What is the carrying amount of the goodwill? Okay, following the impairment review. In two, second thing they are saying, not the first one. Yeah, first one we have already seen that goodwill became zero, but second one they are saying in during 2017 they acquired something for 10 million. Tangible assets were 7, then goodwill was 3 million. Okay, and then assets of 2.5 were destroyed. So here clearly it shows that 2.5 was you know already destroyed. So after 2.5, how much is the asset is left? So 7 million. Are these numbers million? Yeah, 7 million minus 2.5. So 4.5 is left here, and then they are saying that of this entire generating unit, the fair value less cost of disposal is 6 million and value in is 5.5. The higher of these two is 6 million, so that we will take. We will see how much is the value left. So tangible asset is 7 million. Okay. And then the goodwill is 3 million. So combined it is 10 million. Now they are saying it has just 6 million. So 4 million is um, this reduction in this value, out of which 2.5 is already this thing. So one remaining 1.5 will also be allocated. So I think this 1.5, because they had 3 million of this goodwill, this remaining 1.5, because total earlier it was 10 million, now this is 6 million. So there is 4 million of impairment, out of which 2.5 they are saying that the assets value has gone down. So that will go there. Then we will see how much is left, and we will allocate it to goodwill. If this 2.5 was not given, everything, the 3 million we would have allocated to goodwill, and the remaining 1 million would have gone to tangible assets. But they have already given that the assets has completely destroyed. It's not like impairment or something, it is completely destroyed, so it is left at 4.5. So 2.5 million is exhausted here. Then the remaining 1.5, out of this thing will go to goodwill first. So the goodwill will be now, out of 3 million, 1.5 is gone. So how much is goodwill left? 1.5. And that is what they are asking, what is the carrying amount of the goodwill. So first answer will be there, 1.5 million will be the answer for question number 74. Okay. Now, question number 75. Using the drag and drop options below, select the correct amounts to complete the double entry required to record the revaluation. So what we do, this is in the third they are asking. Okay. So let me freehold the computer. This they have taken. Let me copy it and bring it along with this question so that it is easy to understand and everything. Yeah. So they had a freehold property costing 100, 50-year life, accumulated depreciation was 20, then the carrying amount was 80. Then they revalued it to 130. Okay. All right. So there is definitely a revaluation surplus. Okay. Revaluation surplus. Surplus. How? Because it was carrying amount was 18 and now it is revalued at 30. So revaluation surplus is there. 130. What is happening? 130 minus 80. 50,000 will be credited. We will credit revaluation surplus with 50. Then what will be the corresponding debits? So it is already given, like in this question only, accumulated depreciation and property at cost will be this thing. So we can reverse the accumulated depreciation in this case when there is a revaluation surplus. This we can debit, but how much we can debit? Only to the extent the balance is there. So here you can see in the question only it has given that it is 20,000 is the accumulated depreciation. So this only we can reverse here, right? So we can take this 20,000 as credit. The balancing figure of 30,000, this will also go in debit, but what will we debit? Property. hmm, Property at cost. Okay. So this will be our answer. 76. What will be the depreciation charge relating to assets in third for year ended 30th December 18? So here they ask about these things, but now on 31st December 31st December 2018 they are asking what will be the depreciation charge, okay, relating to the asset in third. So third we have reproduced here only. Now they are saying on so what is the policy around it? Let's read it. Okay, it's a 50-year life. Okay, and account depreciation was this much, and 31st December, this thing. So 100,000 over 50 years, how much it will be? Like originally it was, if you look at it, its cost was 100,000. So let's see, its cost was 100,000, right? So, and the depreciation is 20,000. I'm just reproducing this fact here. That's what they're asking. What will be the depreciation charge? So 20,000 was the so for how many years they have already charged? Because useful life was 50, no? So every year it should be charged 2,000. So because they have charged 20,000, that means they have already charged for 10 years already, we can divide it by 50, and here we can write that total 50 years. So how much is left? 40 years is left. So now our value is how much? 130,000, right? So this revalued value, this will be divided by 40. So 3,250 will be charged every year. So for this year it will be 3250. Third one will be the answer.